Welcome to 2025. And let's be real, inflation is a real buzzkill. It's like that annoying friend who eats all your snacks but never chips in for more. It eats away at your hard-earned money, making everything more expensive. If you're just stuffing cash under your mattress or letting it sit in a savings account, it's losing value every single day. But here's the good news. You can fight back. And one of my favorite weapons is dividends. Dividends are your secret weapon against inflation. Think of them as a raise from your investments, putting money directly back in your pocket. But here's the thing. It's not just about getting those checks. It's about what you do with them. That's where the real magic happens. In this video, I'm breaking down 5 powerful dividend strategies that can help you crush inflation and secure your financial future. We're going deep, my friends, so grab your notebooks, buckle up, and let's get this money. All right, let's talk about dividend reinvesting, or DRIP for short. This, my friends, is the foundation of building long-term wealth. When you reinvest your dividends, you're buying more shares of that stock or fund. And guess what? Those new shares pay dividends too. It's like a snowball effect, but instead of snow, it's your money growing. Now you might be thinking, but those dividends seem so small. What difference does it really make? Let me tell you, it makes a huge difference over time. Remember the power of compounding? It's like that, but on steroids. Imagine this. You invest $10,000 in a company with a 4% dividend yield. That's $400 in dividends per year. Now, instead of spending that $400, you reinvest it. Next year, you're not just earning dividends on your original $10,000, but on $10,400. And the year after that, even more. This snowball effect can supercharge your returns, especially in the long run. Even small amounts reinvested consistently can make a massive difference decades down the line. It's like planting a seed and watching it grow into a mighty oak tree. The best part? You don't have to lift a finger. Most brokerage accounts offer automatic dividend reinvestment plans. You set it up once, and it does the heavy lifting for you, quietly building your wealth in the background. So remember, when it comes to dividends, reinvesting is the name of the game. Don't underestimate the power of compounding. Okay, so you're ready to dive into the world of dividends. Awesome. But hold your horses. Before you go all in on one stock, let's talk about diversification. Remember what happened to that one friend who put all their money on their favorite sports team? Yeah, not pretty. The same goes for investing. You never want to put all your eggs in one basket. Why? Because even the most solid companies can face unexpected challenges. Diversifying your dividend portfolio is like having an all-star team of income-generating investments. You want a mix of companies from different sectors and industries. Think of it this way. If you only invest in tech companies and the tech sector takes a hit, your entire portfolio could suffer. But if you have some tech, some healthcare, some consumer goods, and maybe even some real estate, you're spreading your risk. Now, diversification isn't just about different industries, it's also about company size and geographic location. Consider investing in a mix of large cap, mid cap, and small cap companies. Don't be afraid to look beyond your home country either. There are plenty of great dividend-paying companies all over the world. Remember, diversification is your safety net. It helps protect you from major losses and smooths out your returns over time. By spreading your investments across different assets, you're setting yourself up for a more resilient and potentially more profitable portfolio. All right. Let's talk about dividend growth investing, a strategy that's near and dear to my heart. This is about finding those awesome companies that consistently raise their dividends year after year. Think of it like getting a raise from your job, but instead of your boss, it's your investments. Now, why is dividend growth so powerful? Well, for starters, it's a strong indicator of a company's financial health. Companies that consistently increase their dividends are typically profitable, well-managed, and confident about their future prospects. They're basically saying, hey investors, we're doing great, and we want to share the wealth. But here's the real kicker. Dividend growth can outpace inflation. If a company's dividend increases at a faster rate than inflation, your purchasing power actually grows over time. You're not just keeping up with the rising cost of living, you're getting ahead of the game. Now, finding these dividend growth champions requires a bit of research. You'll want to look for companies with a solid track record of dividend increases, a sustainable dividend payout ratio, and strong future earnings potential. But trust me, the effort is worth it. Investing in dividend growth stocks is like hopping on a train headed towards financial freedom. So pack your bags, grab your snacks, and enjoy the ride. Now, let's talk about high-yield dividend stocks. These are the rock stars of the dividend world, offering those juicy yields that can make your mouth water. I'm talking 6%, 7%, even 8% or more. But before you go chasing those sky-high yields, there are a few things you need to know. High-yield stocks can be tempting, but they often come with higher risks. Sometimes a high yield is a sign that the market is concerned about a company's future prospects. It could be facing declining profits, increased competition, or other challenges. Think of it like this. Would you rather have a $100 bill that's slightly worn out, but still good, or $10 bills that might be counterfeit? Sometimes, a lower yield from a more stable company is a better long-term investment than a high yield from a company with shaky fundamentals. That being said, not all high-yield stocks are created equal. There are some solid companies out there that just happen to pay generous dividends. The key is to do your research and understand why the yield is so high. Look for companies with a history of consistent dividend payments, a manageable debt load, and a clear plan for future growth. Don't just chase the yield. Focus on the underlying business. Remember, a high dividend is great, but it's worthless if the company can't sustain it. Okay, let's be real. Not everyone has the time or desire to research individual stocks. That's where dividend ETFs come in. ETFs, or exchange-traded funds, are like baskets of stocks that you can buy and sell, just like individual stocks. Think of dividend ETFs as the ultimate diversification tool. They invest in a variety of dividend-paying companies across different sectors and industries. This instant diversification helps reduce risk and can potentially boost your returns. One of the great things about dividend ETFs is that they do all the heavy lifting for you. The fund managers select and manage the underlying stocks, so you don't have to spend hours researching individual companies. Plus, dividend ETFs are super convenient. You can buy and sell them through any brokerage account, and they typically have lower expense ratios compared to actively managed mutual funds. Now, there are tons of dividend ETFs out there, so it's important to choose one that aligns with your investment goals and risk tolerance. Some ETFs focus on high-yield stocks, while others target dividend growth companies. Some even focus on specific sectors or geographies. So whether you're just starting out or you're a seasoned investor, dividend ETFs can be a valuable addition to your portfolio. They offer a simple, low-cost, and diversified way to tap into the power of dividends. So there you have it. 5 powerful dividend strategies to help you fight back against inflation and build a more secure financial future. Remember, investing is a marathon, not a sprint. It's about making smart, informed decisions that align with your goals and risk tolerance. We hope this information has been informative, engaging, and empowering. By understanding the impact of inflation and the potential of dividends, you can make informed decisions to protect and grow your wealth. Remember to do your research, stay disciplined, and focus on the long term. Thank you for joining us today, and we wish you success on your financial journey. And hey, if you found this video helpful, hit that subscribe button for more videos on how to crush it financially.